Well, hello and welcome to Upside, where we look behind the headlines affecting European venture. Today, Lomax, Mads and myself, and we are talking about, we're talking about very briefly some UK politics. So we are going to go into the exit, no exit, repealed, Reeves repealed tax. We're going to look at state of AI. We're going to look at the Einride SPAC, EU and Chinese vendors, a little on Palantir. That's in the quick news section. And then in the deeper dive, we are going to look at some tech sovereignty, the cyber attacks still piling in, Chinese kill switches, the hyperscalers accounting fraud, according to Michael Burry. We'll have a look at that. Now, he's just shutting up shop. And Mads, I'm going to lean on you to dig into that. Latest in AI and deal of the week. Now, I can't not start without mentioning our chat last night, gents. So we were all chatting late into the night about how much we shouldn't go into what's going on in UK politics, the Reeves budget. And we must talk about the exit tax, which is now no longer. So I don't know, Mads, you were the most resistant to talking about this, and I know why, and it makes total sense. We need to just do heads down and build. It kind of almost doesn't affect us. It does, but come on, let's just get our engineering, efficiency, productivity, AI, investing, startup hats on. But tell us more. So kind of go into a little bit of it very quickly, promise.
The idea of an exit tax is something that other countries in the world have introduced at various points in time. It turns out that as you keep raising tax rates, eventually people that are entrepreneurial and industrious and like to make things and build things eventually say, gosh, this is really a little bit expensive to be around here. I think I'm just might go somewhere else. And so to stem the exodus of entrepreneurs from some countries, they are saying, well, if you leave, we're going to tax unrealized gains as if you had sold all your stuff, and you're going to have to kind of, answer for any, tax you might be liable for, even if it turns out at some point in the future that the thing you were building turns out not to be worth what you said it was. So, how does that apply to venture? Well, let's say you're a founder who does really well, and you build a business to, let's say 100 million in value, and let's say after your Series B, you're still owning 20% of that company. So you've taken something and turned it into 20 million. And let's say you now need to move to the US to keep growing that business and making it into a global category leader. Well, if you had an exit tax, you would be taxed the day you left as if you had sold your assets, and you'd be liable for that tax. And the way this is interpreted in some countries is even if the business then later fails and you end up not having any money or making any money out of it, you still have to pay tax on that notional gain you had the day you left. And that's, of course, a terrible idea. And it was mooted for about 5 seconds here in the UK. And because it's such a terrible idea, everybody got very excited about it, and it was discussed a lot. But I think even the not always terribly business-minded Labour government could see just how incredibly dumb that idea is, and sort of they shelved it again. So I think that pretty much sums it up. Have I missed anything?
No, I mean, I think it's also good to share. There was a lot of noise around it, and I don't think people fully understood that it was an exit, as in you leaving the country tax rather than an exit leaving a business tax, although interconnected. And also, I don't think most people know that Germany and, is it Norway, have an exit tax. And
many
so there is...
do.
So there is, and I understand. I think also people got on their high horse and didn't fully understand the intent of the government to say, look, we want that money to stay here and be recycled here and to build here. Not fully appreciating what you just explained very well, Mads, which is, it just doesn't work, and all people are going to do is go elsewhere. It's just a silly, pointless thing.
Well, that's it. I mean, there's sort of, now we're on it, right? So we have to go here. I mean, there's the other thing, which is the UK is not a very big country, and the world is a big place. And the way we are going to win is by being a destination of choice for the best and the brightest founders to come here and set up business.
Which we've
Well,
done
guess-
before, right? We've done
Which
this
we
before.
absolutely have, right? The UK London was Europe's #1 talent magnet. And I mean, just imagine what a tax like this would do. It would absolutely say to talent everywhere, we're closed for business, don't come here, we're not business friendly. And so it's just totally self-defeating and something that, hopefully we can, pull a stake through the heart of this devilishly thing and hope it never comes back.
Well, she was definitely pitch rolling it well, wasn't she? Well, to be fair, it was pitch rolled for like all of 5.5 seconds and then recounted. The Reeves repeal was speedy, but I love the way that these notional kind of things are thrown out there. Oh, bad idea. Okay, we'll just take that one.
Well,
back.
I think there is an element of deliberate, like some of this is deliberate. Historically, I think this has always happened. Is that in the run up to a budget, they selectively leak certain ideas that they have to test them.
Do you think?
With the
But
market.
Lomax, do you think it's a blue elephant? Do you think it's purposeful and then hide something else under the?
I don't ever think it's to hide anything. I think it's to test things. It's to test things to see how the markets would take them, to test things to see how they would be received politically. Because otherwise you end up, if you think about all of the backfires over the years in UK politics, like the pasty tax, the granny tax, the whatever you want to call it tax, it's to avoid those kind of headlines, I think. But it goes back to let's not spend a lot of time on this, but I will just say it does go back to the point that there is this feeling that the government don't know they don't know what they're doing. And if you look at the budget last year and the budget this year have been significantly delayed. And when you delay a budget, you leave open a lot of room for conjecture like this. So it's generally not healthy at all. I think we need to get to the budget next week and then move on. In fact, or 10 days time, whatever it may be.
Let's move swiftly on. I know a very unpopular topic, but I didn't know how we couldn't not cover it.
The only thing that was interesting from Tom Blomfield, the founder of Monzo, proposed something on social media, which effectively is that for the period in which, if you did leave the UK and then sold your business subsequently, for the period in which the gains accrued while you were in the UK, you would pay UK capital gains tax on that, and then in the country where you moved to, so you would at least be paying tax on cash receipts rather than on a dry tax charge, which is the problem with the exit charge. Again, like also complicated and probably unnecessary, but just it wasn't actually a terrible suggestion if you had to have some kind of halfway house.
Right, let's move on very quickly. Nailed, coffin shut. The AI report from McKinsey. It's a semi-nothing burger, but Lomax, there were a few points in here that I thought were quite. I mean, nothing that we don't know really, but I thought it was quite an interesting report. If you haven't seen it, it was the QuantumBlack AI report via McKinsey. And it's basically saying that the enterprise is really seriously working with AI, mainly on the agentic side, which makes total sense, mainly in workflow, again, makes sense. But it's not working. So Lomax, anything in there on the quick news side?
I think just quick news is like, basically saying almost every large organization that says it is using AI now, not unsurprisingly, but only a small fraction say they've generated a meaningful bottom line impact. For example, only 1% of companies say they've reached mature AI deployment. So in a way, if you're being optimistic, you're saying, well, there's still a hell of a long way to go. And when we talk about probably later in the show, the huge amounts of CapEx and how's that all going to get funded? Well, then if we're only at 1% penetration, then clearly there's a long, long way to go in terms of implementing AI in enterprise. So that's probably a very, very good thing. But we are only, but progress is slow, is for sure. So that's probably the takeaway from that report.
The other quick news section I wanted to go into, I first came across this a couple of weeks ago, was the Nexperia debacle. So they're the Dutch chip maker that are being throttled. So I think they design in the Netherlands and then produce, or then they ship to China to be finished, produced, and then they ship back. And they make the mid-tech chips, not the high-end chips, but the mid-tech chips that, like, I don't know, do the window mechanism in your car or the handbrake mechanism in your car, but massively important. And there's been a bit of political toing and froing and other toing and froing. Mads, what's the deal with Nexperia, very quickly?
So Nexperia is part of sort of the silverware of the European chip industry, semiconductor industry. It's a legacy from, I think, from the Philips days, right, where ASML also came out of. And Nexperia actually produces semiconductors, but they don't package them. And it was sold to a Chinese company. And what happens today is that the wafers are created in Europe, and then they're shipped to Asia, primarily China, for packaging and finishing before they're then shipped back to Europe for insertion into cars. And Nexperia's got a huge market share. I mean, kind of that business has got something like 40% market share in some of these very high volume, low value chips that go into all kinds of automotive aspects. It's kind of the power diodes, it's the MOSFETs for the EV battery management, it's the traction inverters. It's kind of lots of good stuff that helps regulate power in an EV. Right? It's really, really important. They're not, each one of them is not very valuable, but you can't make a car without them. And so the thing is that the automotive industry has got 4 to 6 weeks of inventory. And so if supply stops, you can kind of keep running the assembly line for a month and a half, and then that's it. You cannot make more cars if you don't get more of these things. There's a huge debacle and sort of power struggle between the Nexperia and the Netherlands and China. And at some point, the Dutch said, listen, that's it. We're going to seize the asset. We're basically going to take it over because we don't want to be beholden to the sort of threat of Chinese supply chain stopping our automotive industry. And the Chinese then promptly turned around and said, well, that's fine. It just so happens that every time you make one of these wafers, they still come to China for finishing, and we're going to stop shipping any of them back. So quite quickly, what we figured out was, look, we may have part of the supply chain here, but the rest is in China. And so because we don't control that, we are totally at the mercy of supplies coming the other way. And there's a huge lesson here just about how vulnerable the European automotive supply chain is. And I think, this is leading to lots of head scratching around the continent.
It wouldn't be so vulnerable if you hadn't sold a critical supply chain component to the Chinese. Yeah.
Yeah. So the truth is that even if you hadn't sold Nexperia, the packaging is still happening in Asia. And this is, 2 decades of buildup of very, CapEx intensive, laborious, low margin stuff that we were happy to offshore because who wants to do this? These chips that are selling for 50 pence on per or less, right? Super cheap stuff. But it just goes to show how vulnerable you then become.
And this leans into the whole Chinese vendor program issue with Huawei and ZTE and others. That there are some questions and challenges around pulling these out of critical infrastructure. So Lomax, what's happening here very quickly?
So this is the 5G news, right, with Huawei and ZTE Corporation.
Yeah, I think it's starting with telco, but it feels like it's a slightly broader topic. But yes,
in a way, in the context of 5G, I think this is now the EU moving into law what has really been happening in practice in the last 5 years anyway. So it's a formalization of what has already been in place, and this is potentially this is ripping out Chinese suppliers from the 5G infrastructure being rolled out in
Which
Europe.
Has been in the news for a long time.
That's why I said, basically, 5 years ago, we kind of agreed to start implementing this, but now it's actually been giving legal footing. So it will be mandated that the supply chains are free of these vendors. It's potentially a massive headache for telcos in the sense that the ship has slightly sailed in some respects. And so I think there's this and other things we talk about today where really, over the last 20, 25 years, we've become more and more reliant on Chinese suppliers across everything for various reasons. And now we're paying the consequences for that. And now we're saying we want sovereignty over our own supply chain. We effectively want, walled gardens in this respect. But we're making that decision in the context of 5G when we'd already decided to use these vendors in the first place. So I think there are telcos now in Europe who are going to be facing big headaches to try and clean up their supply chains.
The Germans are facing a wall of hurt here. But close to 3 billion euros. Deutsche Telekom alone, 1.2 billion euros just to swap out some of these switches.
So is this trade or security or both? Yes.
Security.
Yeah, yes is the answer. Okay, well, we are going to talk a little bit more about tech sovereignty and the like later. And I don't know, Lomax, if you want to just very quickly talk about the Einride SPAC, because that's a nice positive upside.
Aren't we so back now? We're back
Spackety-back.
Exactly. So we are now SPACing autonomous EV trucks. has a nice ring to it and echo of the 2021 days. So Einride, a Swedish autonomous trucking company founded in 2016, has announced a SPAC in the US at a 1.8 billion valuation. They will also be raising $100 million at the same time. They apparently have contracted ARR of 65 million. They have trucks in the wild in Belgium and Sweden. They have real paying customers. And unlike, you may recall, Nikola, which SPAC'd in 2020.
They're dead, right? They're next.
Yeah.
Right?
And they the valuation of that SPAC was 30 billion. So more than 15 times the value of Einride. And so that company ended up going bust earlier this year. So we have higher hopes for Einride. It's a European company, so
boop, boop.
Great job there. They've raised around 500 million to date, so it's not been cheap to get to where they've got to. But actually, a nice story in the news this week.
That should have been deal of the week, my man. But no, we
got better deals. We got better deals.
Exciting. And very quickly, Alex Palantir, you made me watch that video. Is it sorcery? I can't quite watch him. I don't know what it is, but all I hear is word salad every time he opens his mouth. I can't quite tune in.
I would just look. I mean, Palantir has been the darling of stock market, even a heavily shorted stock of stock markets.
Burry's on Nvidia and Palantir
well,
on
the PE
Burry's
on Palantir
shoulders,
is off the charts. It's has been closer to 200 at one point. Palantir is a hugely influential company. That, talking of critical supply chains, is now selling into many European governments, right?
including the UK government.
Absolutely, across defence, across health, absolutely highly politicized areas as well. I think that there's a book that's come out this week about Alex Karp, the co-founder and CEO.
It was his biography, right?
Yeah, biography. Yeah. And he's done a sort of 25-minute video which is on YouTube with Molly O'Shea, sort of journalist. I would recommend watching that for a
I struggled with it, man.
An insight.
I struggled with it. I think it's 45 minutes, but the guy just talks in waffle to me. I maybe you need to, certain people can tune into certain people, and he's not my guy. But all I heard was word salad. It's like quite scary word salad to me. But you obviously found
that's the guy building the critical infrastructure for the nation's defense and health. So let's hope. I think Palantir has attracted some. I know some of the UK teams, some fantastic talent.
Yeah, it must be.
Must be. Absolutely.
And there's a certain vibe, and which if
he is the sort of modern day I don't know whatever word philosopher king gets thrown around a lot in Silicon Valley, but he's
more like a crazy scientist to me.
Or a Pied Piper type person, but certainly he galvanizes talent and interest and energy. So it's normally listed companies like this can sort of outgrow those kind of personalities sometimes, and at some point you need to get somebody a little bit more corporate, but. Palantir just keeps growing and innovating, and you need someone like that at the helm. Yeah, exactly.
Yeah, fair enough.
He's just hitting his stride. I mean, I'd say it can sometimes, as Dan says, be a little difficult to discern exactly what he means.
100%.
When I've heard him speak, my takeaway is that he was quite visionary around what it takes to build data-driven architectures in an age of AI, which is a lot around data, and using data as government would do to understand people, to understand patients, to understand the tax base, to understand intelligence. Few things are more important than privacy, and having a system that's designed so only the people that are supposed to see the data can see it. And what he will say is nobody comes close to designing and having designed their whole data architecture for privacy like Palantir. So it's the only system you literally can put all this super sensitive data on and feel relatively confident that only the people that are supposed to access the data can access the data. Now, whether that's true or not, it may be an argument, but I think he makes a strong case of the importance of it. And it's clear that he has understood that that is what's important, I think, way before a lot of other people did, which is why he can win so much government business.
Let me give you a quote from Karp. So this is why I feel very, very aligned with him in some respects. So the modern incarnation of Silicon Valley has strayed significantly from this tradition of collaboration with the US government, focusing instead on the consumer market. A generation of founders cloak themselves in the rhetoric of lofty and ambitious purpose, but often raised enormous amounts of capital merely to build photo-sharing apps and chat interfaces for the modern consumer. Amen to that, quite frankly. So I think, he's a guy building serious stuff that we in societies need.
Okay. Well, we are going to talk about him.
Not your cup of tea. Okay, move on.
Really not. But then I'm so drawn to, I find that there are these incredible entrepreneurial characters, the Zuckerbergs, the Bases, the Musks, the Thiels, the whomever. But as soon as they're in a position of power, I start to recoil a bit because I can't disentangle as an emotional creature the person and the business. And I don't think it's always a useful mindset. It's a failing of mine. But when I'm engaging with these kinds of characters and they feel like me, they're living on planet Zanussi somewhere, I just want somebody with a sense of duty and care for other human beings to be in charge.
You get too emotional, Dan, but I think, I mean, I don't disagree with you. One thing I would say, by the way, about Karp is you watch this stuff and you read it. He has, this concept of backing founders with a big chip on their shoulder, that drives them, keeps them up at night. Karp definitely has a few of those in terms of his backstory.
He's baked in trauma, and you can see it. Yeah. And you can see it in his body language and in his voice and his eyes. There's a fizz. There's a fizz to the man as he bounces off the walls. But it doesn't sit well with me. And I think there is a layer in there that will almost become Muskian, where it pops off the charts on the other side of this success and this power and this money. But we'll see. I mean,
he's also very, very proud that he's basically made a whole cohort of investors, what he would say kind of venture style returns in the public markets, which, he's obviously having a very public battle with the short traders, short sellers at the moment. But
which we are going to cover. And thank you very much for the segue, because we are going to one of our deep dives is the market meltdown. Now, at time of press, it is Friday the 14th in the UK, 4:29 p.m. And we have seen over the last day, especially 24 hours, and for a short period of time, a bit of a market meltdown, some version of correction. I think the only buck in the trend is Apple last time I looked, but it looks like everything else, Mag 7-esque and tech and AI, has taken a hit, NVIDIA being the biggest hit, I believe, at about 10% down in the last 2 weeks. So a wobble, is it a bubble popping? I'm not going to ask either of you to crystal ball, but Mads, can you start this one off for us?
Oh, well, I might crystal ball a little bit anyway, because I think this is...
Love your crystal balls.
This is probably just a bit of risk off and people taking some profit after a great year. I think this is what's happening, but there are always stories, there are always narratives that you can use to justify what's happening. And I think there are two vectors that are worth considering right now. One is the one we've been talking about all year, which is Chinese open source models that are incredibly good. We've been saying for a long time that the frontier labs in the US, they are threatened by the open source models because they've become so good. A quarter or two ago, they were 6 months behind, but we've seen Kimi K2 come out in the last week or two being on some parameters better than the frontier labs models. And it's an open source model and it's free. So what do you do if you built your whole kind of investment thesis on putting hundreds of billions of dollars, behind these frontier labs so they could spend money with the hyperscalers, they could spend money with NVIDIA, that they can recycle it all back round, and somebody now comes along and says, well, I can give that tech away, that Anthropic and OpenAI have spent so much money developing, I can give that away for free. Okay, so that is kind of one specter there that's haunting markets.
Not touched by tariffs, not touched by export controls,
Well,
not
you
touched
can go
yeah.
to you can go to Hugging Face and you can download it. You can run it on your own laptop if you have enough memory, right? Or you can buy one of those beautiful NVIDIA boxes and sort of a local GPU, and you can do real damage. So that's on one side. It's getting people a little spooked. On the other side, you've got the hyperscalers. And this is where there's been some exciting kind of news these last few days here, because we've got Michael Burry, who was one of the protagonists of The Big Short, kind of one of the few people that saw the collapse at the great financial crisis and saw these subprime mortgages and shorted them in time. He has said, look, there is just so much accounting fiction that's going on here with the hyperscalers that they're overvalued. And so what does he mean by that? Well, it turns out that when you buy an asset like a GPU, you don't expense the full cost of that asset all in one go. You have an assumption around how, for how long you can use that GPU you bought from NVIDIA, and then you're trying to use that as you calculate your P&L. So if you buy that for $100,000, you might say, well, I can use it for 3 years, and therefore I'm going to expense, a third, so say $33,000 every year into my P&L, and that's my cost. And when I calculate my profit of my business, that's how much cost I'm going to put into that calculation. And over the last few years, as the innovation cycle of tech has gone up, and as the release of new hardware has gone up, the hyperscalers have all said, well, we think that the hardware is not going to have a shorter lifespan. It will have a longer lifespan. And that, of course, is the same as almost making magic. Because instead of saying that these assets will last for 4 years, blum, 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 they are now going to last for 6 years. That means instead of expensing 25% of them each year in my P&L, I'm now only going to expense 1/6 of them in my P&L every year. And Michael Burry, he's looked at that and he's saying that just does not make sense. It doesn't make sense for a number of reasons. First of all, you're expensing them in a straight line. That means you're expensing the same amount of money every year. Just for easy math, let's say a GPU cost $120,000 over 6 years, that would be $20,000 a year. Well, if the cost of it is $20,000 this year, you're sort of saying that's how much I'm going to expense it against my P&L. There's no way it's going to have the same value 6 years from now, because the GPUs keep getting better and better, right? There's just no way it's going to be as valuable. So that's the first thing. But the second thing is the gating factor today isn't necessarily GPUs, it's power and data centers. And so what we've seen companies do is they start to rip out the equipment before it has melted, right? They start to rip it out to put new equipment in that's faster, because the new GPUs are so much more powerful than the old GPUs that financially you can't justify keeping them for too long. So at the same time as all this stuff is happening, Google and Microsoft have both said, well, we think we can use them for 6 years and we should depreciate them that way. And so Burry and others have looked at it and said, guys, you're overstating your profits.
Yeah.
Now, what might really be happening here? So, it's possible that everybody's thinking, we just need to show numbers that are good enough for long enough for all the ROI and all the enterprise spend on AI to come good, that this becomes a self-fulfilling prophecy. And if it does, nobody's going to care 5 years from now that we have to write off these GPUs, because we will have arrived at some new economic paradigm where all will be forgiven. The risk, of course, is that it takes longer, and suddenly you're going to be left with a big charge, right? Let's say that you had assumed that you'd expense them over 6 years, but really after 4 years, you have to write them off. Well, suddenly you're going to have to take a big hit in your P&L. That'll depress profitability, and the hyperscaler numbers won't look nearly as good as people thought. So this is another thing that's spooking markets. So we've got that on one hand, we've got the Chinese open source on the other hand, and so just enough of a specter sort of, walking around, whistling around here that people are getting a little spooked.
But Burry is great at dropping a bomb and then deleting his Twitter account, isn't he? He's done this a number of times, old Cassandra, where he goes, mic drop, boom, deletes the account.
100%. Look, like many clever people, he has probably forecasted 10 of the last 2 recessions, right?
Yeah. He did the 20, he did obviously the GFC, although he nearly got in a lot of trouble over the Big Short, the GFC predictions, where he really had to pull out the legal powers to stop people from trying to close down his fund. Was it Scion, I think, which he's just now closing?
In investment, being too early is the same as being wrong. And look, I think this is more of a little hiatus and a little risk-off period than actually a full-blown meltdown. And so it could be that he would have had to hold those positions for another 2, 3, 4, 5 quarters. And it's just nobody can afford that, right? The markets can stay irrational longer than you can stay solvent, is the old saying.
Now, Lomax, before I bring you in, I want to I was Googling Michael Burry and just to understand a little bit more about the man. I didn't realize he's actually a medical doctor. He lost his left eye at 2 to cancer. He's a super introvert, just almost reclusive. And as we've already mentioned, he has put calls on Palantir and Nvidia. So he is assuming a cool off in AI. But Lomax, what else would you dig into on this topic?
Well, I think this ties into actually, so we talked about the McKinsey report earlier, basically saying 2 things. One is, which impact this, I think. One is that there's still a long way to go in terms of AI adoption in the enterprise. So that's good news because, it shows that there's still a lot of AI revenue on the table out there.
But do you think there's a fear, very quickly, do you think there is a chance that all these enterprise pilots are going to cause a break in that, okay, we tried it, it doesn't work, that's it, we're not doing that again? Or do you think this is just an iterative force where they're trying, they're failing, they're not implementing, but they're going to keep going? Which way would you go?
I've said it here before, is that I do think that there will be, people won't see the productivity gains that they wanted from AI. And so there will be a cooling off at some point, for sure.
Okay.
I think long term, I'm bullish on this, but I do fear that there's an exaggeration now of the benefits from AI, which may not be actually realized in the enterprise. And that may cool down some of the spend.
It will never be realized, or it will take longer than people think?
Take longer than people think.
Just to lean in very quickly, Verizon have just laid off another 30,000 people today. And there's another, and again, we don't know where the connective tissue is between AI, automation, workflow, because if 1% of projects in workflow are succeeding, that is not the version of layoffs that we're seeing. Again.
Oh, no, sorry, but I wasn't saying 1% are succeeding. I'm just saying, 1% have kind of been
fully
realized,
deployed.
Fully deployed, exactly. One thing I would say is there is obviously huge amounts of capex there's forecast now over the next 5 years, like trillions.
And Meta just pledged 600 billion in capex.
Yes, it's like 4 trillion of capex over the next 5 years. Actually, if you read this Accel report they've just put out about the global scape, they call it, AI and computing. You need a lot of revenue and free cash flow to justify that capex, right? And the bridge from one of the questions is like, how big is AI revenue today, right? The obvious thing is you can look at, the OpenAI, which forecast ending the year at 20 billion run rate revenue, something like that. That's what they last said, I think.
It sounds familiar,
5 to 6. So if you take those as a proxy for revenue of AI, it's hard to strip out companies like Microsoft, for example, because they don't report it separately. But that's a lot of, even if we're in the kind of 50 billion of AI spend now, we need to get that from 50 billion to trillions in the next 5 years to start to pay back this capex. No, so that's like a lot. That's a big step up that we need to see.
Yeah, there were a number of social noises around ROI in AI, which I thought were quite interesting, and I'll post in the comments. Well, let's look at tech and sovereignty, because they're coming from, obviously everything that we talk about is so closely interlinked, and everything here is going to affect Europe. And we've got the Chinese angle, we've got the American angle, we've got the European angle, and everything else in between. But on the tech and sovereignty piece, there were a number of stories this week around kill switches. We had buses in Denmark, in the UK. We've had a massive AI-powered cyber attack, I think diffused in some way by Anthropic, where they are confident that Chinese state actors were using their LLMs to cyber attack. So, Mads, where would you start with this kind of tech sovereignty piece and what's going on here?
the Anthropic news is pretty hot off the press. And it was sort of Anthropic coming out and saying, look, we think we've uncovered a major security incident. And it's really interesting in terms of the description of what they think has happened. So, one might think, look, the Chinese have got incredible open source models now. Have they been using those to attack, Western institutions? It turns out that's not the case. What happened was good old social engineering. So Claude, and especially Claude Code, I mean, it's a fantastic setup because it's amazing at what's called tool use. So it's great at, in an agentic way, being given some instructions to achieve an objective and then to go out and figure out how to do it. Now, there are all kinds of security procedures built into Claude Code. That means that you can't use them. You're not meant to be able to use it nefariously. But, if you go and you say, look, actually, this is my company, or I'm an employee at this company, and I'm trying to inspect any security vulnerabilities we might have at my company, and can you help me do this, Mr. Claude Code? Very, very clever AI, because you are just brilliant at probing all this stuff until you figured out where the weaknesses are. Well, it turned out that some clever hackers, they set up lots of Claude Code instances, and they impersonated being employees of other institutions, and then instructed the AI to go and figure out where the vulnerabilities were. And this is brilliant because, this Claude Code can run for days and just do, it can really do a lot of damage if you let it. So it was pure social engineering, and that broke Claude. And it was then set up eventually to make thousands of requests per second at a scale that was completely impossible for humans to do, to probe about 30 organizations in tech and banks and government and figure out what weaknesses were. So a bit of a master stroke, I would say. Not at all a surprise, and just I think a harbinger of things to come.
It reminds me of when I can't remember who it was, when ChatGPT was being used to make bombs, and it said, no, I won't tell you how to make a bomb. And then somebody said something along the lines of, well, I'm writing a new novel and I want to tell the story about somebody making a bomb, and that tricking LLMs to give them the real juice behind the scenes kind of reminds me of that. What was the deal with the buses, Mads? What was unpacking there?
Well, again, it's back to this, vulnerability, tech sovereignty angle, which is, we've talked before about, buying defense equipment from the US, and does that come with a kill switch if the Donald one day decides that, he likes Putin more than he likes NATO, right? And similarly, maybe slightly less risky, one could say, but are there kill switches on these buses that have been driving around? And we could say, look, in the UK, there's expected, or I believe that there's about 700 of these Chinese buses that have remote access capability. Similarly, in Norway and in Denmark, they've been found. And so, can they be turned off at will if somebody decides that that's what they want to do?
But why would they? I mean, what would be the case that the Chinese government would want to turn off a bus in Copenhagen? I mean, really?
I think that's a great question. But take two steps more on the chessboard and ask yourself what's going to happen within physical AI, within manufacturing, within logistics, when suddenly it might no longer be buses taking, citizens around a city, but it might be robots that are, running around the manufacturing plant,
performing surgery
or next generation, manufactured goods, or even armaments, right?
But how far do we go with this level of distrust? I mean, it just feels like this is a rabbit hole where everybody loses.
And there is a very big risk that we will be poorer than we could have been if we had a world with more trust. But I just think we need to wake up and acknowledge that that's where we are today.
Of course.
And I don't think it's been contested that these buses had a kill switch and they could be remotely deactivated. And so one might ask, why would you want to build that capability into a bus to begin with?
Lomax, you were going to...
Well, I think the big picture, if you step back, is China joined the World Trade Organization when? 2001? We basically spent the last 25 years outsourcing as much as we can to China because it's cheaper and more efficient for us. We lost that capability ourselves. They used that money to develop their own capabilities. We were quite happy to buy that. But now we've decided we're not happy to buy that anymore, or we're worried about certain things or integrating it into our critical supply chains. So we've retrenched from globalization, and we are trying to do everything full stack ourselves. It's all part of this. And it is based on mistrust, as you said. But that's the world that we live in now, guys. And you need to decide as a society, in a way, like there's sort of decisions and then there's execution. And it's like, well, if we decide we want to do everything full stack, then let's get on with it and bloody well build it.
We can't. I mean, not one country.
We can't,
China's probably the closest to it.
Yeah, we can't in the next 2 months, but we can.
How? How can we go full stack without access to all the raw materials to build all the things that we need in Europe?
We need to get hold of critical minerals, that's for sure. But China's not the only source of every single rare mineral, right?
Yeah.
But we need
rare
to build
earths are in your backyard, aren't they?
And it will mean, I'm afraid it will mean bad things. It will mean bad things for people who don't like things on their doorstep. It will mean bad things for the green lobby. But ultimately, Europe will then have control of its own destiny. I think it's exactly what's happening in the US.
But the inertia is going to be nuts. I mean,
if you look at it from a planetary perspective, it's lunacy that explaining it to somebody from another planet, that every single society is going to go full stack. Seems ridiculous.
But is this not just a kind of a populist, Trumpian, right-wing acceleration force that is creating this narrative? And
I don't know, Dan, because
this...
if you could say if you say this is just populism in the West, well, why have the Chinese been building the biggest navy and the biggest army, before this over the last 20 years anyway? Like, I mean, it comes from all sides. It's not just a Trumpian thing. I think it's happening across the world. No,
fair. It just feels like it's an accelerating force. I mean,
let me ask you another question. Let me ask you. I mean, so there was a unipolar moment, right, after the fall of the Berlin Wall, after the fall of the Soviet Union. The United States was completely unipolar, had absolutely unrivaled military capability, and could act as the policeman of the world. Was that the right model? Was that the good model? Did that always lead to the right outcomes? Or is there a model that is maybe a little bit more multipolar? I think you could argue that we've swung the pendulum too far in one direction. Now we've become too dependent on other regions of the world for some things. But could there be a future where there is a little less dependency, a little more mutual respect, and
not without any trust? There won't be, Mads. If we don't have any trust in any of these networks, we're all just fighting our own corners.
But trust and verify, right?
I don't know where we're going to land, which is why I love these conversations, because it's given Europe a kick in the pants, which it needs to, take all these things much more seriously. As I've said before, I think defense is going to be a positive accelerating force in that way, on the manufacturing side especially. But I just don't know where it's going to land on the other side. I mean,
if I were to take the other side of that argument for a minute, Matt, you could say that what led us here was trust. We were trusting that we could offshore all of this stuff and everything would be fine. But I think the opposite side of that coin is we allowed ourselves to grow, frankly, fat and lazy. We've completely outsourced our autonomy, and we're lacking self-reliance. Our societies are not healthy. The number of people that are out of work, that are not productive, our government finances, it is not as if this took us to a place that was the ideal state in any imagination. So wouldn't it be better to have a little bit more self-reliance, a little bit more of a focus on actually being able to do the things we have to be able to do, like make stuff, defend ourselves?
I agree. I just think we also need to trade. We also 100%. Need to connect.
But that's my question, is will we be better trading partners when we are more equal? If it's not always one group, one party that can switch off all the others, right? I think some of that imbalance might be what's leading to the mistrust.
Well, that's fine, but we just have to get used to $10,000 iPhones, right? And that's the outcome here.
Or is there middle ground?
I'm being obtuse on purpose.
I think that's always the argument that was made for globalization, and I think so. Here's what happened: was, if you look at between the early '80s And 10 years ago, interest rates were going down and down and down because inflation was going down and down and down. And politicians and central bankers thought that they were geniuses, that inflation would never come back. When actually all that happened was we found an inexhaustible supply of cheap labor, which is what enabled inflation to go so low, because there was just no way we could consume more than what could be produced. Well, but that's come to an end.
Yep.
Right? So
a new world.
A
Read
new
Ray
world.
Dalio, huh? The end of empires. Any more, Mads, on AI Corner? What have we missed?
Well, there's lots of the usual stuff happening. More data centers being built. More,
Will we need them? Here's one for you, Mads. Will we need this compute capacity with the popularization of open source?
Yeah, I think so. I think we are going to. I mean, this is Jevons paradox, right? The cheaper this AI stuff gets, the more we're going to use. And the world 15 years from now will be unrecognizable.
But it's not just it's not just cheap. It's the efficiency play. So there's two. Great. I get Jevons when you're talking about coal, but this isn't just one source. This is it gets more efficient, smarter, cheaper. It's like multi-vector, better.
Yeah.
So,
and because of that, we're going to run it all the time, doing stuff we couldn't even have dreamt of.
Yeah, fair. I guess we don't know where those lines are yet, but I do think that I would be semi-wary. Maybe I'm being too conservative. Semi-wary on the DC side because there's so much capex being spent.
Is the question whether we at some point are going to overextend ourselves? Of course we are. It's human nature.
Yeah.
Right. Every time you have a major tech paradigm shift, all the capital is going to go after that, and will keep going after that until the thing blows up.
Until someone says too much.
Absolutely. Like it will not stop until it blows up. There will never be a soft landing.
Human nature.
It's human nature. I just don't think we're there yet.
Okay. I also think there will be some governing forces, and energy and water will probably be and maybe, I don't know, planning permission. There will be governing forces that maybe don't mean that you can get $600 billion worth of compute rammed into a data center within, a short time.
Energy is a very natural constraint, and we're not going to have nuclear fusion anytime soon. So I think you're right. Energy is definitely a rate limiter.
Any more before we move on to deal of the week? Any more in AI Corner? Let's get on to my lovelies. Lomax, you crack on because you've been fizzing about this deal.
Yeah, I got two deals of the week, but I got main deal of the week is BillionToOne. So BillionToOne IPO'd last week, and it's relevant for EU tech because one of the founders came from Turkey, which I would say not in the EU, but it's in Europe. So BillionToOne, YC company, summer 2017. It's biotech, it's diagnostics, molecular
Your
diagnostics.
bag, baby.
Yeah, it's not. Some people would call it a biotech company. It's not a biotech company in the sense that it makes therapeutics and drugs, but it's certainly within the broader biotech category. So I think it's the most successful. YC traditionally had done, famous for Airbnb, Stripe, etc. One of the first forays into biotech. IPO'd last week at a roughly $4.5 to $5 billion market cap. Big company, only 8 years old, did $152 million in revenue last year and did 125 in H1 this year. So run rate roughly 260, 270. Their core product was in neonatal testing, like genetic testing. And actually they have another product, which actually I've used. So they have it in minimal disease testing. So for cancer patients who are trying to monitor the progression of their disease, that is a growing market, liquid biopsy.
Yeah.
And I used it, actually, was in contact with the founder. I was put in touch with him by one of the investors. So personally had a great service and have a lot to thank them for. It's also relevant for Europe because the biggest investors were European. So Hummingbirds, the venture fund in London, probably the most successful venture fund that not many people have heard of, or at least they definitely like to keep a low key or keep a low profile, owned nearly 20% of the company on IPO.
Nice.
So that's, at the $5 billion market cap, that's $1 billion. The other investor, Libertas Capital, also had had also friends of the pod also had a large stake. So huge outcome both for European investors. And this was a company that I think no one really wanted to fund, quite frankly at the beginning. So great result.
UiPath-ish then.
And then another deal which is interesting, just because our friends Novo were in the bidding, but did not win this one. This is actually a kind of public M&A event. So Metsera, which actually is a venture-backed GLP-1 company, so one of these obesity
That's a
drugs.
Great business model, that is. The more you use, the more you pay, the more you have to use.
But Metsera have developed novel drugs only in the last 3 years, all venture funding. They raised a few $100 million in venture funding and have now just been acquired by Pfizer for $10 billion.
Okay.
This is relevant because actually biotech has been a little bit, and Novo were the underbidder on that. It's relevant really because all the big VC funds were in that deal and will have made a lot of money out of it, and that will flow back. Most of them are biotech, and biotech has been a bit depressed. So I think that's really, really good news for biotech, which will also hopefully trickle through to European companies too. But that's a massive result. $10 billion M&A, only a few years after founding.
Yeah, nice. Well done. Mine isn't quite as sexy as either of those. Mine is Gamma, which is the PowerPoint killer. So Gamma, they do AI-generated presentations, websites, social posts, those kinds of things. They've announced a $68 million round, Series B at 2.1 billion, led by Andreessen. And the reason that it intrigued me was because I've always been wondering at what point the office suite is going to be disrupted. Now, I'm not convinced this is that, but it feels like Word, PowerPoint, Google, slides. It feels like there's a world where you don't need this kind of attachment to these suites, and I'm wondering where Gamma will play in that. So that was my deed of the week. Anything else before we tail off? Anything else biting any backsides or anything else we want to share?
No, we had Web Summit this week. Slush next week.
Oh, how was
so
it? I heard it peed with rain.
We had a big storm come through. Web Summit is good. I mean, it feels like it's got bigger than ever, but it's very corporate now. Very, very corporate.
Is it?
Yeah.
Has it turned that corner?
I think for startups and VCs, it's sort of on its last legs, I'd say.
Really interesting. Because Mads, you're off to Slush next week.
I hope Paddy Cosgrave's not listening. Although,
is he still involved?
Yeah, he's the CEO again. Yeah, well, he owns it, and he's the CEO. Yeah.
I didn't know if that was all
Web Summit now have big events, in Qatar and in Rio. I mean, the whole thing, it's a big machine now.
You're not slushing, are you, Lomax? No, Mads, you're slushing, aren't you, with Jamie?
Indeed.
Yeah, I think that's probably my favorite
with other
founder-focused event. Yeah,
Good.
lots of naked VCs.
It is more founder and GP, and there's a lot of LPs going to Slush.
Yeah, they're trying to build.
I know a lot of US
as far as I
LPs
can
going
see.
to Slush. So Mads, get your hat open or your hat out. Yeah,
Do it.
Always. Always be selling.
Always be closing. Gentlemen, thank you very much. Love today, and I'll catch you all next week.
Bye-bye.
Love you guys. Bye-bye.
Upside.